So hi guys, very good morning to all of you. So this is Rahul Prajapati. So today's session is we are going to discuss about the Nifty option strategies, the basic, and the very advanced option strategies, and probably I would say the which are very prevalent in the market. Okay. So before we start with the today's session, a quick reminder for one of the the greatest event that we are going to have, that is Option Symposium. So that is one of the biggest option conference of India actually, right? Okay. So there are a lot of the international speakers and Indian speakers will be there, and they're going to share their different type of strategies that you guys can also use. So you can in your option trading specifically. So it will be a global experience that you guys are going to have. So if really interested, you can join it, right? Okay. Now, so what we are going to do today is in the today's session is we're going to talk about the different strategies, right? So not specifically a live market thing, right? So we are not going to talk about the strategies which are like intraday specifically. So we are going to talk about some strategies that could be worked upon, a bit of positional basis or probably weekly basis, and probably for 1 or 2 days also, right? And a few strategies which is based on specifically on the expiry and the if we can just we can hold it for like 1 day or 2 days, right? Okay, so in this way. So first of all, what the strategy that I'm going to share is the one of my favorite personally that I like it. So I'll show you that from the architect perspective, and we're going to talk about the overall structure of that strategy also with you know the option Greeks of that strategies also, right? So we'll try to analyze that particular strategy from all the perspective. Okay. So I'll share the screen with WhatsApp. Okay, and okay. So now, so first, so majorly we're going to talk about the strategies. So that means we're going to use majorly one function, that is architect. Okay. So I'll discuss the all the points from a strategy. First, I'll try and show you how to make it, and then I'll show you, what are the different things that we need to check in that particular strategy, right? So let's go and try our first strategy. Okay. So it's Nifty. So, for any particular strategy, right, creating any particular strategy, you required at least some view about the market, right? आपको थोड़ा सा मार्केट में अपना व्यू क्रिएट करना पड़ेगा. ओके, विदाउट क्रिएटिंग वी कैन नॉट टेक एनी स्ट्रेटजी, राइट? Either it be bullish, either it be bearish, or either you are anticipating market will be likely to trade in a range bound. Okay, so before that, let's a quick check and then we'll come back to this. So we'll again go to the the built up function and we'll see what is happening. So across, if we check F&O market as of now, so we have 121 stocks which is in short, and then unwinding is 19. Approximately 140 stocks are in going down today, and only just like 50 stocks probably that they are up, right? So so the overall structure seems to be negative as of now. Okay, so majority of the stocks probably showing a short. Okay, and then we can see the stocks which are actually dragging the market down. Okay, so we can see that also. Plus, if you want to see major any contribution from any particular stocks, so you can go and check it simultaneously from Nifty. So the Kotak Mahindra on the positive side, Kotak Mahindra, Infosys, TCS, Bajaj Finance. So majorly two heavyweights from the IT, and then SDFC and Reliance. So these are the stocks. Okay. So whenever, so this is a debut we have created by looking at the whole structure of the market. We are anticipating market is likely to come down, and seems like it's going down as of now. Now, second thing, when we talking about the strategy, we always understand the overall structure and then we'll create a strategy. Okay. Now there are different type of strategies. There could be a directional strategy, non-directional strategy, or we can create some non-directional strategy. Then we can convert that into a directional one. Okay. So first of all, the strategy that I want to share is very common, very useful, and very effective in index specifically. So that is iron butterfly or butterfly, you can say, right? Okay. So how do we make it? How do we understand it? So let's try that. Okay. So whenever we are creating a butterfly strategy, our view is non-directional. We are not anticipating any move. How do we change it to the directional strategy? We'll talk about this. Okay. So first, let's create a butterfly and then try to understand this particular strategy. Okay. Now, so we'll be creating this in the as of now in the monthly one, or you can go for the 20th 23rd December expiry. Okay, so let's make from that perspective, because only we are left out with 2 days only. Okay, now, so if we look at the market right now, it is somewhere around 17,200. Okay, now if we are anticipating like, okay, market is likely to trade in the range of like 17,500 or 17,000, so this 500 points likely to be the range of the market, then we can create a strategy on this. Okay, so how do we do it? We'll go and make a butterfly on this. So butterfly strategy can be created by using the calls, can be created by using the put, or the combination of both, right? So first I'll create it from the call option only. So what we'll do, we'll create, so first of all, let's go with the first leg. So first leg would be sell. Okay, so I'm just selling this 17,300 call option with 2 lots. Okay, so the selling part will always be 2 lots. Okay, right? And then we can have, now this leg is already in a short, so we need to protect it. Okay, so we need to hedge it. Now what we'll do, so from the call only we'll hedge it. Okay, so let's take a equidistance from here. So 17,500, I'll go and buy a call out of the money. Okay, so for the next expiry, fine, we have bought one. Okay, and then again we'll buy in the money call option, one call option. So same equidistance, so we can go like, so that's 200 points. So we can go 200 points for call option and we'll buy one lot. Okay, so we have taken the current expiry. Okay, now, sorry, so 17,100 will take for the next expiry. Right? Okay, sorry, my mistake. Okay, now here it is. So this is how it's likely to be. So we can check our the break even also first. So break even is 17,135 and 17,470. So this is the expiry break even. Okay, so that means we are like have approximately 400 points range. Okay, and whenever we are anticipating a range, right, so we can create this strategy. Okay, and although we are seeing that market is consolidating since few days as of now, so from here what we are anticipating is, if market is likely to trade in a range of 17,500, we can easily create this strategy. Okay, although this range keeps on changing as we move into different expiries, and as market changes its direction, right? So this is the first thing that we can create. Now why I like this strategy, it is like you don't have to create your view mostly. Okay, if like even if you're like 50% right about the market, you can make the money out of it. Now second thing why I like this strategy, now if market stays in a range, right, so the maximum profit that I can earn is somewhere around 7,000. Okay, and what is the maximum loss then I can lose is 1,800 rupees. So anyhow, even if I earn like 2 times of the my loss, like 3,400, even market closes somewhere here only. I'm not anticipating market will always close at the center. That's not going to be possible. It will be closing somewhere or in between only. But the thing that I can lose is not that huge amount. That is only 2,000 rupees, right? So even if I able to earn like 4,000 rupees out of it, or like 1:1 also, still I'm better off. Okay, so now you can create this strategy every time in a or every week in Nifty, right? Okay, so specifically why there are a lot of people who are only trying this strategy and they are making good money out of it, right? And you need to create this strategy when, always create this strategy at on the expiry day, from somewhere around 3. Okay, so now once we create the strategy, we need to carry this strategy for the next expiry, right? Okay, and then we'll again book off, we'll square off all the positions at that expiry and we'll create this strategy for the next one, right? So it's always executable when we are very close to the current expiry, and then we'll create for the next one, right? Okay, so this strategy we can create it from the call, so we have done it. Okay, you can also create it from the uh, put also. If you, even if you create it by the put, it will remain the same. Most of the your risk reward will likely to remain the same. There is nothing going to change in that. Okay, So we call it a long call butterfly. When you do it from the put, so it will be like same, right? Now, generally what people do, apart from this is they generally create a combination of both call and put, right? So what do we need to do in that? I'll show you. So I'll just go and reset it. Okay, so we'll go with 23rd only. 17,300 call option. One lot I will sell, and 17,300 put option I will sell. Again, the next expiry, 17,300 put option I will sell. Okay. Now, generally what I have did, I have created a straddle. Now I need to protect this straddle, right? So I've created a short straddle. For protecting the straddle, I'll again need to, hedge it. So I will buy one call and I'll buy one put with the equidistance, right? So what I'll do for call, I'll go for 17,500. Okay. So I'll buy it. So we have protected this leg. Now we need to protect the downside also. Okay. So what we'll do, we'll go and put, sorry, we'll see the expiry first, 17,100, and we will buy a put. Fine. Yes. Okay. Fine. So if you see, now this is short iron butterfly. Now whenever we call, create a combination of call and put, we call it a iron butterfly, right? And if you see, hardly any difference with a profit and loss, right? Again, in between 7,600 and loss is approximately 1,900. So 2,000 rupees, right? Not more than that. So you create it anyway. Hardly going to make any difference specifically, right? So iron butterfly are very good to use when we are, specifically Nifty for a weekly to weekly basis, right? And risk reward is fine, limited risk strategy, and the margin is very less required in this particular, strategy, right? So preferably, I generally prefer this strategy. Okay, and even if even it is not asking for higher margin, you can create in multiple lots also, right? So that is a with less margin you can also work in this strategy, right? So that is the first strategy that I like, and I generally love to create this. Okay, fine. Now the second strategy we can modify it. Okay, so how do we are going to do this? So I'll talk about this. So generally, this is when we are anticipating that there is no move at all. We are anticipating in a market. Okay, sometimes we do get a bit biased towards either on the bullish side or either on the bearish side, right? So we need to modify this strategy from a different perspective. Okay, so we just need to will do some modification in the strategy and we are through. Okay, so what we're going to do is we can again create this strategy, right? Okay, so what I'll do, I'll go 23rd, 17,300, sorry, 17,300, two lots. So I'm making it from the call perspective. You understand that all the risk reward remain likely to remain the same. So I'll sell it. Now what I need to do, I'll go first and buy the in the money put up call option. So 17,100 for 23rd expiry. So I'll buy this. Okay. Now when we are bullish about the market, when we are a bit bullish about the market, so we are not going to create a equidistance spread here. So what I did, I sold 17,300 and I bought 17,100 for in the money, right? If I need to create a butterfly, I will go and buy 17,500 call option. So it will be equidistance. What I'll do is I'll just shift that leg a 1 or 2 strike price back. So what I'll do, I'll add another leg. I'll go and I'll create 17,400. So just only 100 rupees difference on the upside, 200 rupees difference on the downside. Okay, I'll buy it. Sorry, again, my mistake. So we need to go and check it. 17,400. Okay. Okay, now see this. So why I have created this strategy? Just you can see one leg is a bit broken and it is on the upside on butterfly, right? Okay. So wing spread, but one wing is on the upside bit. So why we have tried it? Because let's say I'm anticipating market can be a bit bullish, on the upside. Okay, so market can be bullish, right? So I was anticipating, okay, 17,500 was the level that, okay, we can anticipate. But now we are saying after that, if market moves up, it can again move up. So once if we are going to create a strategy like butterfly, what the problem that we are going to face is that if market moves like, drastically on the upside, it will enter into this leg, the area where we are in the on the losing side. So there, what we need to focus specifically is that if we are bullish on the market, we will still earn something. Not that much, but still we are not losing out of it. It's better to earn at least like something out of you are losing it. So if you are bullish about the market, we will just modify the upper leg. If you are bearish, we will just modify the lower leg. Okay. So we can create a modified butterfly strategy. Okay. This is a modified butterfly strategy. Again, less margin required and, you know, uh, limited risk and even a bit of directional strategy also. Right. So I hope you are able to understand what we're discussing. So there are two basic strategies that we have discussed: a butterfly, which can be created by call specifically, and put also, and the combination of these two. So that's when we are creating, when we are non-directional about the market. Second, when we are creating a modified butterfly strategy, when we are saying, okay, I'm anticipating a direction in the stock or Nifty, right? So always just modify the upper leg. In case of you are bullish, modify the lower leg when you are bearish about the market, right? So just you need to shift that to the leg close to the sold strike price. Fine. This is how it's going to work, right? So even if you are market runs up, so here you're not going to lose much of the amount, right? So this is how you can play in these two strategies, right? So this is from the non-directional perspective, okay, and you can easily make it, and you can easily create every week, right? So that's the thing. Okay, now if you go and check the strategies here, so Vega is a bit negative on this, right? Theta is in our favor. Specifically, you can see theta is 40 and delta and gamma is almost 9. So movement does not going to benefit anything in this, right? Much benefit, but Vega and theta is are which are the problem. Okay, so theta is in our favor, Vega is in against us. Okay, so if volatility increases, we are going to lose in this strategy. So Vega is going to affect our strategy negatively. If time passes, we are going to earn. So theta is in our favor. Okay, so that's positive value. Fine. I hope we understand this thing. So these are the two strategies. Okay. Now third strategy again, which I like specifically apart from the long call. Okay. So that's butterfly. Oh, sorry, that's calendar spread. Okay. So butterfly we have already discussed. So that's a calendar spread. So why I like this? Because there are two things. Mostly, here we can avail the benefit of theta first. Simultaneously, we can also avail the benefit of the Vega also here. So theta and Vega could be in your favor again. Okay. So it hardly we see that any strategy gives us both the things in our favor. Okay. Why I like this? Because of this thing only. Because there is no, the moment is not going to affect our strategy that much. But what is going to be in our favor is theta and the Vega both. If volatility increases, again we are going to earn. If time passes, again we are going to earn. But if movement comes, we'll definitely lose, but we'll not lose that much. Okay. So I'll show you how do we make it. So we'll go to the again architect. Now, so here always two different the expiries are included whenever we talk about the calendar spread. Okay. So what is this calendar spread? If we talk about, we'll do. So let me just go with this. Okay. So we'll include two expiries. So 23rd expiry and 30th December expiry. Right? We'll include these two. We are not ignoring as of now 16th December because time has already been passed. Okay. Not much time we have left, but to just today and next day. Okay. So first, let's say the current expiry is 23rd. Okay. December. So here what we need to do is you need to always sell the current one. So in calendar spread, what we are going to do, we are going to sell the current expiry. Okay. So we'll be selling this strike price. Now, so this is a short call. I want to protect it. I want to protect it with different expiry. Why? Because I know the theta of this strategy is good. Okay, theta of the strategy and vega of the strategy is almost same, but again vega is going to affect me because if volatility is there, the premium is likely to be increasing, right? So which is negatively affecting me. So theta is in my favor as of now. Now I need to just protect it. So what I'll do, I will go and I will buy the same leg for next expiry. So 30 December, 17,300, we are going to buy. Okay. Now this is something looks like a calendar spread. Okay. Now what is the benefit of this strategy? Now you see theta and vega both are in my favor. Simply you can go and check that ki theta bhi 150 ka hai aur 186 ka aapka vega bhi hai. That means here if time passes we are going to earn, if volatility increases again we are going to earn, and most probably movement is again in our favor. Gamma is negative, so it's very negligible as of now. So mostly all the Greeks are in our favor here, mostly. Okay, so that's going to benefit you anyhow. Okay, so this strategy can be deployed every week. Okay, the time is again 3, around 3. You can create on expiry day for next 2 expiries. So tomorrow we are going to create it on the on tomorrow, basically at 3 3 o'clock, when market is about to close for the expiry. We'll be doing this, creating this strategy exactly. Okay, so again if you see the break even, it's again 500 points, a bit of higher margin, but not an issue. Again, margin is not going to be major problem. So why we have created this strategy, we are selling the current one where theta is high. So you can see the theta is 500 rupees if we are going to check the call option for the current expiry. Now when we are going to check the call option on the next expiry, it has a negative theta, so we have bought it, so that is 300. So again we are going to have a positive theta for 148, 147, right? Now we understand that the vega for the current expiry is always less, and for the out the next expiry or probably far expiry, we have a vega, higher vega. So you can see the net effect is again positive. So create the strategy on 3 o'clock on expiry day, and then carry the strategy for the next, and then again on that particular day book the previous one, and again then create the next one. So these are the 3 strategies that you can create every week. So you can generate income out of it, right? So this is not a trading strategy specific that you can trade every day. It's just carry strategy, and you can carry it from like Thursday to Thursday, and you can generate income out of it. I hope this is clear, right? Okay, so these are the 3 strategies. This is which you can easily make money out of it. And even though if you're not able to predict the market, right, so now what is the other thing that good about, I feel, is about for the strategies, like let's say so even if you see what is the maximum profit loss we are going to have in the strategies, 4,000 rupees. Okay, so the maximum profit is more 4,000 if market stays here only. Maximum loss that I can see here is right now till 16,600. See, market is 17,400 as of now, sorry, 200. Even if market falls by 6,000 rupees or 600 rupees approximately, or more than that, so still my maximum loss is like 2,600. So let me just change it to 16,000. Okay, so let's check that level, and 18,500. So let's go with this 16 15,500, and then we can create for 18,500. Okay, now you see this gets straight once it reach maximum level. Okay, so 16,400 is the maximum loss, like 2,700 is the maximum loss, and again on the upside is also 2,700, right? But even if market stays in this range, we are going to make approximately the same amount, right? So mostly a 1:1 ratio or a bit more you are going to get. But the best thing about this strategy is the theta and the vega is in our favor. Okay, now let me just check if I have some queries, then I'll move to the next 2 strategies. Fine. So first is if we like now, so if we are talking about the the calendar spread is always go for the next to next one. Okay. Now, why we are not creating the even if you're but talking about butterfly, even if you're not creating that strategy for specifically like the week expiry, always go for the current one because the theta will always be in your favor, right? And you can create it in every week. Fine. How much capital is required in butterflies? Like approximately not more than approximately 50, 60,000, not more than that. Okay. I'm talking about the higher side. I'm going for 23rd. The reason being here is that we are just left out with 2 days only. Okay, so I can create on that also, but this word will not be in your favor, right? Okay, no. Okay, butterfly is basically when we are creating the strategies again. Reason being we are creating the strategies just we are not anticipating the market direction. Okay, so you go and sell the strategy, sell any particular strike price, whatever you are seeing. Like if you're seeing a direction of 500 points, so you sell at the center, right? So I'll go with like 2 lots, but you need to sell 2 lots. Okay, now 2 lots will require higher margin, so what you need to do is you need to hedge it. So what you'll do, you'll go and buy. So I've just created this for the current expiry. Okay, so 17,500, go and buy that. So I have hedged it on the upside. Now I need to hedge it from the downside also. So I'll go and buy the 70,100 call option. That is a bit expensive. So this is how it went. So see, even like you can get good money out of it, right? But loss is also there. Like so 1:1 is a ratio as of now. So go for this. And if the margin is like less, so you can what you can do is you can create it in the multiple lots also. Okay, you can get this from the put option also, and you can create the combinations also. So go for any particular way. Okay, the risk reward will always be same approximately for all of the 3 combinations, right? Okay, that is the thing. Plus so first is long call butterfly or butterfly strategy, ironfly, whatever you call it. Then we have modified butterfly. So modified butterfly, the second strategy. Third, we have discussed about the calendar spreads. Okay, so that is the 3 strategies we have discussed as of now. Okay, so in calendar spread, yes, we need to exit both the legs. Okay, so let's say if I created a strategy tomorrow for like 17,300 for 23rd and 30th expiry. So once we will reach on the 23rd expiry, okay, जैसे ही हम 23rd expiry पे पहुंचेंगे, उस दिन you need to square off your both leg because most probably your current leg would have lost all the value. Okay, it will be very negligible. But the next expiry always have a theta value there, so that will reduce in a smaller portion, right? So still have it will have a value. Okay, so you need to exit both the legs simultaneously, then create another for the next one. So again we need to sell the current one, right? Always. Fine. How to create but PE butterfly? You can sell 20,300 PE both, and then you can buy in the money put option of 17,500, and you can buy out of the money put option for 70,100. Okay, it just you need to follow it. Okay, call के हिसाब से सब बनाओगे and you can create it, right? Okay, so this is the 3 strategies that we have discussed. Now generally on expiry day we work on this. Okay, so expiry वाले day के लिए क्या करें? Okay, so expiry वाले दिन के लिए क्या करना चाहिए? Generally people like to sell the option on the last day specifically. Okay, so उसके लिए क्या करना चाहिए? Again we can talk about few strategies, right? Okay, so सबसे पहला जो strategy है आपका, एक normal way में हम क्या करते हैं? We go for a straddle. Okay, so जब हमें रेंज पता है कि मार्केट इस रेंज के अंदर रह सकता है फॉर सम फॉर 2 days एटलीस्ट, या उसी दिन एक्सपायरी वाले दिन, तो कल के लिए लेट्स से आई एम एंटिसिपेटिंग ओके मार्केट अभी आपका 17,300 के आसपास ही रहेगा, उसका प्रीमियम 163 रुपीज चल रहा है अप्रोक्सीमेटली, सो 64 रुपीज एंड 90 रुपीज. सो कल अगर आज का प्रीमियम टूटता भी है पूरा स्ट्रैडल का, तो भी लाइक अप्रोक्सीमेटली 140 या 120 तक तो आपको मिल जाएगा कल भी. 120 से 100 के बीच में अप्रोक्सीमेटली आपको इसका प्रीमियम मिलेगा, राइट? बिकॉज द इंडिया विक्स हैज कम अप अ बिट, राइट? सो इट्स लाइक ट्रेडिंग बिटवीन 16 18 ऐसा करके कुछ रेंज में है अभी. सो उसकी वजह से प्रीमियम हाई मिलता है. जब ये 12 12 के आसपास चल रहा था, 12 10 या इन रेंज के, इनके रेंज में चल रहा था, तो you might have got the premium of only 70 rupees of straddle, right, at the money. So generally what we say, so when volatility increases, we have the higher premium. So as of now, I'm getting 163 rupees premium. So what I'll do, I can create a straddle for this. I'll go and sell both the legs of 17,300. Okay. So generally the straddle are very famous on the expiry day. Okay. So 17,300 आप कल ट्राई करना. You need to try this tomorrow. Okay, I'm just showing you today. So call आपने sell कर दिया 63 rupees का, and you will again go and sell the option. Okay, so see here, this is the graph that we need to look for as of now. So again, you can check the break even. Break even again, we have the approximately 300 400 points break even we have. Market has to stay in the in between range for tomorrow at least, right? So maximum profit is like 8,000, and loss could be undefined. As of now, we don't know how much defined loss we are going to have. So if we write bit conservative, what we'll do, we'll just hedge it and create it in a butterfly. But if your short straddle is there, you need to, if you don't want to do this, you will be putting a stop losses on this. Okay. So how do we do it? So we can, go and create a, we can just give me a second. Okay. So we can put a stop loss out of it. So it's like 165 rupees. Okay. So tomorrow at 10 or 9:30, whatever you feel like. Okay. 10, you can see this straddle of these two. Let's say it's trading at 120. Okay. So let's forget about the today's price. It is trading at 120 rupees. Okay. Now the current straddle is 120 for 17,300. I'm anticipating. So how do we calculate a break even? 17,300 plus 120 on the upside minus 120 on the downside, right? So this will be your range. Okay, 420, and then we can have like the range in this way. Okay, so that means you are anticipating market should not be crossing at least like 300 400 points range on that particular day, right? Now here what we are going to talk about is how to put a risk management on this. Okay, so once you created this strategy, let's say you have a premium of 120 as of now, tomorrow at 9:30 or whatever time you created, you need to take a percentage out of it, right? So how do we take a percentage? If the VIX is higher as of now, let's say VIX is more than 20, 25. So always, or on that particular day, let's say market is showing a high volatility. So put some XYZ percentage stop loss. Okay. So let's say you can go with a 50% stop loss also when the volatility is high. Okay. When volatility is high, so 50% of this value. Okay. So how do we put it stop loss? So 50% of this value will be like 60 rupees. Okay. Fine. So call is trading at, let's say, 63 rupees as of now. So I'll put a stop loss at, just add 60 rupees into this. Okay. So 123 or 120 rupees for call. Put we have 100 rupees. So I'll put a stop loss at 160. Fine. We have sold a call option and put option. Now we have put a stop loss on the call option and put option both. Okay. So why we have done it? Because if market moves up, the call stop loss will trigger. If market moves down, the put stop loss will be get triggered. But one will remain in the market. Okay. So in case like you just want to go with a short strategy. Okay. But again, it will require a higher margin. So that's why I always prefer to convert into, butterfly even on the last day. So here margin will be like higher even on trading on the intraday, right? So यहाँ पे margin will be like approximately 2.5. ओके 2,25,000 के आसपास का मार्जिन कुछ लगेगा, इतना लगना चाहिए. बट ये चीज अगर आप बटरफ्लाई में कन्वर्ट कर दोगे तो यू विल हैव अप्रोक्सीमेटली बेटर रिस्क रिवॉर्ड इफ मार्केट लाइक रिस्क रिवॉर्ड भी अच्छा होगा वहां पे. एंड व्हाट यू आर गोइंग टू हैव इज यू कैन क्रिएट दिस स्ट्रेटजी इन द मल्टीपल लॉट्स आल्सो. मतलब 2 लाख रुपए 2.5 लाख रुपए लगा करके यू आर हैविंग अ अनडिफाइंड रिस्क एंड आपको इतना ही पैसा मिल रहा है अगर वो एग्जैक्टली मार्केट बीच में क्लोज होगा. But if you convert this into butterfly, your SWOT will definitely improve. You can increase your lots also, right? तो 4 लॉट में बना सकता हूँ अगर अप्रोक्सीमेटली मेरा उतना ही पैसा लग रहा है तो 6,000 का लाइक आराम से 20,000 रुपए आपका प्रॉफिट आने की प्रोबेबिलिटी हो सकती है उसमें। एंड 1,800 रुपए का लॉस था, तो 1,800 रुपए के हिसाब से 4 टाइम्स आप उसको भी इंक्रीज कर लो लॉस को भी, तो 8,000 का लॉस अप्रोक्सीमेटली, राइट? सो इट वुड अगेन विल बी अ गुड ट्रेड, राइट? बट जो लोग शॉर्ट सेटल करते हैं, जिनको ऑप्शन सेलिंग करने में अच्छा लगता है, सो दे विल ऑलवेज डू द ऑप्शन सेलिंग, ओके? सो ऑलवेज गो इन दैट वे। Okay, so okay, fine. So we have done with the queries, right? Okay, so now so this is you can create a short straddle also. So this is the fourth strategy that we can do. Generally people do also, okay? So this is the another strategy. Now I prefer one more strategy which I, we do it. So generally what people do, they go for a, short strangle, okay? So short strangle means I'm going and selling the out of the money call option and out of the money put option, okay, to create a different type of, like, reward in this. So when we are anticipating, okay, the market might move a bit, so in that case, but generally I don't go and prefer, trade the your, short strangle specifically. So we just go and create another leg, which is another way of that strategy doing. So that is, I'll show. So okay, let me just create it. So the fifth strategy is short guts, okay? So here we are going to sell in the money options, okay? So let's say I'm anticipating market is likely to trade in 17,500 and 17,000 range, okay? So I'll be taking the next expiry, let's say as of now. So I'll go and sell 17,500 put option in the money, okay? I'll sell it. Make sure you select those like which are liquid, okay? Here you cannot do that mistake of selling, some illiquid, legs specifically. So I'll sell it again, okay? Now this seems to be like, your short strangle only, okay? Fine. The maximum profit is approximately, I can get this much, you can see, right? So 8,000 profit is there, right? Maximum, but again loss is there. But again, if you see, the range we have is huge, 16,800, sorry. So I'll just make it again, 16,000 and 16,800 and 17,600. That is the range we are going to have, okay? So that's very big range as of now, right? So shortcuts even can be created on Bank Nifty also, okay? That is again a very good way to make money in the Bank Nifty also. But the reason being here is what we are talking about, why we are creating this strategy specifically. There is a reason behind it, okay? So I'll just again do it. So we'll go and sell the put. So I'll just make it 17,000 call option sale. Now see, so here the problem is this always is. So what is the protection that we are going to have is this thing. So here we are almost delta neutral, okay? So movement is not going to affect that much as of now, but whenever we are selling in the money options, right, their delta is high, okay? So their delta is always high here. So what we are going to do is, when even the market moves a bit, right, so the other strategy, the other leg will not going to hurt you much, okay? So let's say if market started moving up, the call option will, the price will start rising. There I can have a problem. Oh, sorry. So there, call option price will start rising, okay, and put option price will start going down, okay. The in the money, even in the money also, right? So what we can do is, even if market moves in that way, right, the delta for all both the legs are high, so they always protect you to some extent. But if you create a short straddle, right, what is going to happen there is, if let's say market started moving up, what will happen? Either in straddle or strangle, the out of the money call options start increasing very drastically. Okay, and the option that you have sold on the downside, that is not losing its value in a very you can say a quick manner. It will losing its time value in a slowly and gradually manner, in that way only. Okay. So the call option price rises to like from 100 to 500, and your put option only loses like 20-50 rupees or maximum. Okay, so that won't protect you much in that case. But here, because of the delta, it will provide you actually some natural hedge till some extent, right? Now let's say if market moves to this break even, right? My break even. Let's say this is the price, okay, 17,600. So once market will reach 17,600, I'll shift this leg on the upside to at least like 17,000. 17,000 is the current one, so 17,200 we can at least do. If market moves down, we can just come to 200 points down also. So we can keep on just shuffling it. Most of the time, you don't require to do this. Okay, fine. If you do this right, you can even back test it. So we'll go and just do the back test of the strategy. So we are going to sell 5 legs in the way. So even if I like going for 500 points, so okay, 5 would be fine. Okay, so 5 put options, that's in the money sell, minus 5 call option sell. So this is how we are going to have this leg. Okay, now we need to see at what date we need to create the strategy. Okay, so let's try with 5 days, and then we'll go to this date. Okay, so we are initiating strategy 5 days before the expiry, and we are exiting on the expiry day. Now see the result. Even if result is not there, you can just select the days and you can find it what would be the best possible outcome of this. Okay, sometimes you can even create the strategy 2 days before the expiry. Okay. Okay, so as of now, if you see the risk reward is so again the strike rate is good. Okay, probably we might had a hit somewhere. Okay, in probably in the COVID time somewhere there, but even the risk, this is fine. So we can also change it to like some days, like 3 days. So we can just again change it. Okay, so again, not good, right? Even on 3 days is not good. So let's just try it on 1-2 days. So mostly I tried this strategy on the Bank Nifty, that there it works fine. So there we can take a 1,000 points gap. Okay. So there we can also try. Here it seems to be not good. Okay. So let's try this on the Bank Nifty. So we are not creating the strategy on Nifty. Okay. So let's go with that. So put option, we are selling like 10 strike price up. Sorry, 10 strike price positive put option. And we are selling 10 strike price down for call option. Now we are creating this strategy 5 days before and just creating on the exit. Now see what result we get. So we will again change the time also in this. Now see, this seems to be fine. Okay. Now see, this seems to be fine result in this. Okay. Okay, so you can see this giving us a good result at least, right? So Bank Nifty seems to be fine in this. Okay. The risk reward is fine. Again, the trading profit count is also good, and the strike rate is also good, right? Even if we change it to like 3 days before the expiry, you can just find it. So still better, right? Okay, 77%. Right? So so this strategy could be good for Bank Nifty specifically, right? So if you try it on that, you are through, right? So this is how we can change it. Okay. when to exit the short straddle, basically you can exit the short straddle somewhere around 2.5 whenever you create the strategy, right? Okay, 2.5 sorry at 2 or before 2, right? Specifically 2 बजे के आसपास आप निकल सकते हो, उससे पहले, बिकॉज जनरली आपने देखा जब मूव आता है एक्सपायरी पे उसके बाद ही आता है, राइट? सो वहां पर आपको निकलना पड़ेगा पहले। ओके फाइन, ये चीज है। सो या फिर अगर आप उसको थोड़ा कॉन्स्टेंटली देखोगे बैंक निफ्टी निफ्टी में किस टाइम पे मूव आया हुआ है ज्यादा बार, तो आपको एक फेयर आइडिया लग जाएगा कि मोस्टली जो टाइम में मूव आता है इस टाइम के आसपास है, तो उससे पहले निकल जाओ। और नहीं है तो आप क्या करो, what you can do is like if you create a short straddle specifically, initially short straddle बनाया आपने 10 बजे and you can carry it till like 1.5 or 2, 2 बजे के आसपास उसको हेज करके उसको बटरफ्लाई में कन्वर्ट करके छोड़ दो आप, सिंपल, राइट? एंड जाने दो, मार्केट भागेगा भी तो कोई प्रॉब्लम नहीं, बिकॉज मोस्ट ऑफ द स्प्रेड यू हैव ऑलरेडी गेन्ड, राइट? उसमें जो थोड़ा बहुत बचा है वो चाहिए तो आप उसको अगेंस्ट में बाय करके उसको छोड़ सकते हो, राइट? ओके, ठीक है। सो ये आपका स्ट्रेटेजी रहता है इसमें, ठीक है? तो ये आप बहुत इजीली कर सकते हो, राइट? ओके, नाउ दिस इज शॉर्ट गट्स। ओके, शॉर्ट शॉर्ट गट का स्ट्रेटेजी होता है, राइट? Fine. Okay, so guys, just another quick reminder, you guys, I always again, you want to see, like, learn a lot of things in the options market, and so I would always request you guys can go and join the symposium, option symposium. Okay, so this will be online event, right? Okay, so you'll learn a lot of new and interesting things in this. Okay, fine. Now, so we have discussed about the 4 strategies. One is from the specifically weekly perspective, and one we have also mostly other from the weekly perspective on index only. Now I wanted to also discuss a strategy which is like sometimes we feel that okay, there would be a huge volatility in the market. Okay, so for that, countering that volatility, how can we tackle this market? Okay, so there are, I'll share one strategy in this. Okay, so here what we are going to do is, let's say I'm anticipating a very big movement in Nifty, let's say during some event, probably you can say like I'm anticipating, like, say budget. Okay, so and you're anticipating okay, at least market will move 1,000 points up or 1,000 point down, but still sometimes we have a hunch, right? Okay, that market might move upside only, or market might move down. Okay, so what we can do here is that we can just tweak a strategy on that way, and we can just write that trend specifically. So how do we do it? Let's say I'm anticipating a movement on the upside. Okay, so what I'll do, I'll go and sell in the money call option. So I'm creating for 30th December. Okay, so I'll go and sell the in the money call option 1, and I'm going to go and buy 2 lots of out of the money, like so 17,400. Let's say I go and buy same. Okay, sorry. So even this is fine, but I need to select the same expiry. Okay, 17,400. We can go for buy in 2 lots. Okay. Sorry, I'll just do it again. Okay, 23rd, we are selling the 17,000 call option. Sell. Okay, fine. Now मुझे इसको protect करना है, so I'll buy 2 call options. Okay, for the same expiry, 30th December. I'm going to go for 17,400, and then one more extra leg, and we'll buy it. Okay, now see, this is we call it a ratio call back spread. Now here I am anticipating that market is likely to show me a huge movement. So like within 2 or 3 days, not more than that. So you cannot create this strategy like 1 month before. Okay, so we have a time, so that's why. So we are not going to create this strategy like having like 15 days. Okay, so we need to see like just 2 or 3 days before we need to create this strategy. Okay, okay. So this is how we are going to do it. Now, first thing you need to find is why this strategy is important. Why we have created this strategy? First is the market is, we are anticipating market will likely to go up. and it is going to go up, it is likely to show you good movement. Let's say 1,000 points move we are anticipating on the upside. So even like 17,400. So let's say market can move to 18,200, let's say, or 400. Okay. So let me just change it to like this upper bound. So 18,500. Let me just change it. Okay. Now let me create it to 15,000 also. So I'll save it. Now here, see, if market moves by like 1,000 points, somewhere around 18,400. Okay. So here 18,400 is on the red line. Okay. So here red line. So approximately here. So here, even at this point, even on expiry and tomorrow, if even market moves in 2 days, we are going to make 33,000 rupees. That's the maximum profit that we can get if market moves in just 1 day. 1 day, like it can move like in 2 or 3 days also. So there will be profitability will be just adjusted, right? Second thing, if market, let's say, irrespective of going up, market started going down. If market started going down, see the downside leg is again on the a bit on the positive side. So even if market goes this way, totally other way around, right? So it's stuck it somewhere. So still we are not losing anything. At least 3,000 ka profit हम expiry पे बना लेंगे वहाँ. Now the drawback of this strategy is even after that event market does not move. So we are holding this strategy for 2 or 3 days. So there you are going to lose that time value. That's the only drawback you are going to have in this strategy, right? Okay. So I hope you understand this. So volatility strategy bolte hain isko. So market is anticipating a huge move on the upside or downside. Just create the strategy and make sure you don't, you know, here specifically, even if you're bullish, right? So if you're bullish on the event, that means you're going to get it. If you went wrong, again, market will, take you to the area where we don't have a much loss, right? So that's how you can create another strategy. So we have discussed the 5 strategy almost, right? So first one was the butterfly. Okay. So butterfly strategy is good for Nifty. Okay. You can create it every week. If you're a bit directional on that stock or any particular Nifty or even let's say on index, so you can just modify the leg. So we call it a modify butterfly strategy. Third, we discussed about the calendar spread. So calendar spreads we can create on, again, week on week basis, right? From Thursday to Thursday, right? Third, we have, so fourth strategy we discussed about the short straddle. So short straddle generally be created on the expiry day. So create this strategy on 9 a.m. or sorry, 9:30 a.m. Carry this strategy till at least 1:30 and then do a butterfly on that. Just convert that into butterfly. Okay. So in case like before the move is coming, right? Fine. And even you can put the stop loss also. So we have discussed non-directional, directional strategy, and one is volatile strategy. So that's called ratio back spread or put ratio back spread can also be there. So here is a volatile strategy that been anticipating market is likely to show a huge movement on upside or downside, but we are bit biased towards the bullish side. So we are biased towards the bullish side. That means we are saying, okay, if market moves in our favor, we are going to make a good amount of money. If it goes other way around, hit my stop loss, I'm not going to lose. Still, I'm still making some profit. Now the loss that we are going to have in this strategy is maximum is your time value for 2 or 3 days. That's the maximum loss you can have in this. Okay. So this is how we can tackle the market situations. Probably, if you're bullish about the market, you know what you need to do. If you're anticipating bearish, what to do. Even you're anticipating volatility, you know what to do. Again, and if you don't know anything like what is likely to market is likely to behave, go for a calendar spread or butterfly, right? So they seems to be better strategy for Nifty. Okay? So as a trader, probably if you're a positional trader or expiry trader, we have discussed everything that we need to discuss, right? Okay. Further, even if you have still any other queries, right, you can put it in the comment box. I'll check and we can reply on this. Okay. Okay, fine. Same, you can try this strategy on Nifty, Bank Nifty also, right? So it's just you need to see it. Okay, fine. So okay, guys. So I think we have done. So if you have any query, you can put in the comment box. I'll see you again. So probably like I hope you like the session. So if you can also share it with your friends, and you can discuss this strategies. Plus probably I'm going to have another session on Saturday, so I just request you guys can join that also. Right. So that's all from my side, guys. I'll see you again. Thank you so much. Take care. Bye.